So we're just about to get started here into the S&P 500, and as we can see, we are right at these highs, which we've been going over for, quite a few weeks, pretty much since this entire run-up. We've been looking at this level in our videos. If you've been keeping along with them, we've been looking for this to be a potential zone for a quick pop higher to the psychological 3,000 level. So the reason being and behind that is anyone who's been short here, so they're betting against the market, and I'll give you a bit more as an exact as what I'm trying to talk about. So say I opened a position here, right? I like this candle shape. I went, right, okay, let's get into this short. Place a safe stop somewhere, or reasonably safe stop, just above here, the previous highs. What you can see here is, you probably held for the entire move. If you didn't take profit at these key levels, that's a big, it's a massive amount of risk to, or reward to risk. So you should have been taking profit around about there. If you were, you can't really time the exact bottom, so you're not going to really time 24% and bottom ticket. Sometimes you can, and that's good, but majority of the times you're not looking to do that. You're looking to take a reasonably large move and profit from that. But anyway, back to the point is the stop losses will be sitting around here. And so if we drag this out, we can see this is a very key spot. So there'll be stop losses here and probably a bit higher, all the way up to here, or even the 3K level. For those who are long-term short or bearish biased against so they're basically betting against the market. Thinking, everything's going to topple out and we're going to have a financial crisis of 2008, which is very possible, but there was just far too much bearishness, and I think that's what this entire move is getting squeezed out. So anyone who's been majorly bearish will have been squeezed out of the entire position. Now, we seem to be approaching this upward sloping resistance line once again. So until we break cleanly above it, if we break above this with a decent volume, so keep an eye on the volume down here, that should show where people are getting stopped out, buyers are really stepping into this market and then starting to take it higher, and it really could head up to 3K quite easily. A few weeks ago, a couple of months ago, back in February, you wouldn't really, no, we'll not reach new highs again. But in fact, we have many people will never see these new highs again. We're on the brisk of actually doing that. So we're at, another candle like this, and it'll be brand new all-time highs. And that'll cause people to chase. The momentum will really kick in. And then that's when I'll be starting to get a little bit worried, because if that's the case, everyone starts posting, like the Wall Street Journal or CNBC, for example, will start going, new all-time highs, is this the best time to buy? And all this sort of stuff that you don't really have to care about. And it's usually the wrong thing to do, is to listen to those types of outlets. Because they've covered the likes of Bitcoin never as all-time highs, saying it's fantastic and all this, and then for it just to crash completely. So one of the things to keep an eye out, if you see the likes of news outlets getting really bullish, you need to get really cautious, because that's when smart money seems to be exiting the market, whatever market it may be. Could be the S&P 500, could be oil, whatever. So one or two things to keep an eye on. And if we do start to test up here again, or if we do start, to test up here at the 3K level, it could be a decent area to look for any reversal signs. And if they do present themselves, I'll probably look to take advantage of those as well. I'll cover those in the blog post in the coming weeks, as per usual, on totalmarkettraders.com. And here we can have a look at the volatility index. Just a complete sell-off again, so it's fixed extermination. So this is just in complete decay mode for now, and it won't kick in until the S&P starts getting more volatile. So I haven't looked at the oil market this week at all. Last week we were having this area as potential resistance, so unfortunately I've obviously missed this, but oil did react to it really, really nicely. So I would have taken that video. Yeah, it must have been about here. Because I haven't looked at it since the last video. Been pretty busy this week. So yeah, really nice to see this is actually starting to test this channel. If we break below this channel, this channel here, opens the floodgates to 60, and anything below that we can head lower. And yeah, just one thing to keep an eye on. And just be a little bit cautious between, sometimes the ESY on the S&P can be correlated when things are getting volatile, so just keep an eye on that. Lithium starting to have a decent pullback. Not the most pleasant of things to see, to be honest, but again, still liking this low here. It's been respected. As long as we don't break this, we're reasonable chance of heading higher. I would like to see this area for the next few months being retested and breaking out and heading to the high 38s, 40s and beyond. So going to keep an eye on that and the individual stock names that we've mentioned in our blog post and watch lists. Bitcoin. Bitcoin has done not an awful lot. It did, when was it? Friday, somewhere around here. So it's come up. See if we can get any patterns put up here. Well, we've got a wee bit of a channel forming here, and it's not a bullish channel. It's not a bullish formation. It's not one I've ever used. In fact, I think if we break below this, it could be pretty bearish short term. It's almost like a rising wedge. It's not clean though, so it's not really anything that I would really trade myself. What you could do is, if you wanted to trade these trend lines, well, again, that's not something I do as such. But yeah, the Bitcoin, nothing really happening that's of real interest. Still interesting to see it's hanging about the 5k level. If we break below this, we could open the floodgates to 4.4 or 4.3 before we see any type of reversal and trend continuation. So Ripple doing absolutely nothing. It's just meandering about here down at the lows, very suppressed, and so there's not much more we can say about that one. Gold starting to come back up and retest this head and shoulders neckline. So this is quite interesting. If you miss the head and shoulders pattern, what you can do is sometimes if you're already in the position, you can start to scale in on any decent patterns or candle shapes. Now I'll be keeping an eye on this one, see if we can get another trade on it, and yeah, go from there. Uranium, still not much happening from last week. Massive fallen wedge pattern here. So let's move on to the stock of the week, basically. Tesla. So it had earnings, and obviously it didn't come out too well. It must have been an earnings surprise of negative. I've briefly seen the other day that they had some sort of losses or something. Sometimes even if they have losses, the stock might react well, but no, it's obviously going against what Elon Musk has been sort of saying about the company and sort of hyping it a bit too much. So yeah, we're back into this zone here. It is 237 to 230. It's a historical support zone. It's one I've had in for quite some time, and it's one I'll be looking for any reversal signals. Because the earnings are already out, so the bad news is reasonably priced in. If it was really, really bad, this thing would have tanked way below. But it's reacting here, which is pretty interesting. So I'm going to keep an eye on this for the next few days, see if we can get any reaction to that area. If we do, I'll be looking at probably taking it as a reversal. If we don't get any signals for it, just ignore it. So I'll cover that in the blog post out for the week. And yeah, hope you enjoy it. And we'll see you in the next one. Thanks.